but we never stopped trading. So let me show you how we took this trade yesterday on 12 August. That was the 6th trade out of 8 of them. We did hit 2 stop losses and the rest were all take profit. So overall, if we look at the structure of gold, we can see that it was situated between this supply and this demand chain, and at one point it arrived here in this area, and of course I expected a pullback at least somewhere in this area of the imbalance, because we had a break of structure to the downside. So of course I wanted to see a little bit of continuation in order to at least fill this imbalance. So overall, this was the idea on higher time frames. And if we go on lower time frames, on Monday 11 August, we basically just caught the continuation of the Asian move, because we can see a nice bearish push from the Asian move. There was liquidity being taken over here, and then right before the New York hour of volume, we had a small opportunity over here. As you can see, the price kept continuing bearish. So of course it was logical that somewhere lower there was some liquidity resting and that we should search for an entry. Our entry was here around 720. We went for a sell. It hit all the take profits. This was the area you could have layered in here. You could have opened multiple trades around here, like let's say 4 entries, and then the price reversed. So in case that you didn't exit in profit, you would have exited in break even for some of the layers. However, you could have caught some nice profits with us. Gold recently, today is 25 August, and this is my outlook. So what we have here is the fact that gold stopped inside this imbalance area on the left. It tapped it multiple times. As you can see, it tapped it once, second, third time, and then it mitigated it the 4th time. Then after the last break of structure to the downside, the trend was changed to a bullish trend. Not once but twice we had 2 break of structures to the upside and a strong bullish momentum, which is pretty nice to see. So our area of interest right now will be from this low to this high at the moment, and what I expect usually for gold is to come and fill the imbalance a little bit lower. Maybe, I don't know if it's going to happen now immediately or it's going to continue a little bit bullish first and then come back to the imbalance, but certainly remember the fact that imbalance areas need to be filled. Now this is a strong bullish push, and my question is if this is a sign for gold to continue higher and to take those highs, right, that we see here. This is a supply chain, or if it's going to go lower first, clear the liquidity from here, from this demand chain, and then continue above. We have 2 variants because we are scalpers, but of course we can trade in between at any moment. We can ride both waves, the bullish and the bearish, as long as you have a good risk management and you set your targets properly. You can take advantage of both moves. So let me explain you exactly why we took it. First of all, whenever I start my analysis, it starts from higher time frames to lower time frames. All right, on daily, the big event that happened was the fact that the all-time high was taken, meaning that the buy side liquidity was taken first, and more than likely in the future we can expect the sell side liquidity being taken after. However, we were here, we are scalpers, this is our point of interest. If gold is bullish, it's going to continue bullish for a while. So going on 4 hours, there was a break of structure here, followed by another one here. Then on 15 minutes, here comes our trade. We see a break of structure made in Asia. London respected it. I saw those wicks over here that needed to be taken, which they were. So this is liquidity, and this was a break of structure that happened in London. What happened was the fact that New York followed. There was a mitigation of this imbalance area. We took the buy here, we had our target set here, and we left the rest of the trades to run. And this is the situation. Of course, not everyone closed it in the same time. Maybe some of you closed here, some of you closed here. However, the max that could have been possible was 1 to 5 risk to reward. It was a risk-free trade. We usually take multiple entries at the entry point area. We close a few, we set the rest on break even, and let them run until we consider it good profit. Just like this, as you can see, multiple entries. You don't have to do this many, but I recommend at least 4 or 5 entries in the entry area.